guys, it's David, your favorite trader, developer, and money-making sidekick. And today I'm breaking down the most powerful, underused tools in trading, and it's my absolute favorite way to trade. That's using volume profiles. Not just your basic volume bars, this is price versus volume. It shows you where traders actually care, and once you learn it, well, you'll never trade the same again. What is a volume profile? Well, a volume profile shows you how much trading volume occurred at each price level, not just per candle. Instead of seeing volume over time, you see volume by the price zone. It builds a horizontal histogram on your chart, and the bigger the bar, the more trades were done at that price. It'll help you spot where price is accepted, where price is rejected, and it shows you major areas of support and resistance based on actual market interests. So here's the key terms you should know. There's the volume area low, that's the low price of the range. The volume area high, that's the high price of the range. And the point of control, the POC, that is the price level with the most volume traded. The point of control acts as a price magnet or a rejection point, or it also works as a point of support. So how do I use volume profiles in my trade? Well, I use the fixed range volume profile tool in TradingView to analyze recent price movements. I'll find an area in the chart where price kind of moves sideways. I'll pull from this point to that point. I like to scout a section where price moves sideways for a little while. And then what I look for is price rejecting off the value area low. This is great for a long setup. I'll also look for price rejecting off the value area high. This is perfect for a short or a great point to exit my trade. What I like to do is when price is at the bottom of the range, I'll check to see if that's a good spot for a long, or if price is at the top of the range, I'll check to see if there's confluence and I'll take a short. I never rely on indicators alone. I like to pair this with market structure and market trends. Some common mistakes for beginners to avoid. You're using it on the wrong time frame. You want to start with the 1 hour or the 4 hour, but this strategy also works great on the 1 day, on the 12 hour. Larger time frames in general are going to be great for you. You are ignoring the trend. Volume doesn't override the market direction. So if we're in an uptrend, chances of the price going from the volume area low, flipping the volume area high and holding it as support, and then finding a new range, well, that's going to be very common. You assume high volume, that means an automatic reversal. Well, that's not true in most conditions. What I like to look for is confluence. Are we going from the low to the high? And when we're at the high, are we gonna go back down to the low, or are we gonna flip the high and look for a new price range? If you're not using volume profiles yet, well, now you know why you should. It's one of my favorite tools for understanding trading behavior. It'll help you spot traps, and it helps you build smarter entries. And as always, let's learn and grow using crypto together. Peace.